So yeah, do you know that Matthew McConaughey meme where his eyes are kind of bugged out and he's smoking that cigarette? I was sort of like that, but let me back up a second. I'm Jeff Valentino. I love helping people buy and sell houses. If you need help with that, my contact information is below. But today we're going to talk about the dirty little secrets in real estate. I'm going to do that in just a second, and then we're going to go over the real estate market. We'll go over just one or two things nationally, but we're going to spend some time and dig into the local numbers and just see exactly what's going on in Winston-Salem, Greensboro, and High Point. So yes, I missed a listing recently. I went on this appointment and had a good presentation. They really liked my marketing plan, all the things we were going to do. I didn't get the listing. The feedback was that they went with the other agent because they said they can sell it at a higher price. Now this house, the comps were pretty clear on it. It was really clear on the range. There were some high, some low, but the range was really clear on there. So I was confident in the pricing. I was confident we can maybe even outperform the market a little bit with the marketing plan, but I missed it. So here's the dirty little secret. There are over 5,000 real estate agents in the triad, Winston-Salem, Greensboro, High Point, surrounding areas, over 5,000 agents. We sell about 2,200 houses a month. So you can do the math on that. I mean, that's not even half a sale for every agent that's out here. So some are going to do much better than others. The other part of that secret is if you make some calls, you're going to find an agent that will tell you to list your house at double. They'll tell you they can sell it and they might even convince you of it. It's just some of them just need business that much. I don't like doing that because it just sets really bad expectations. I'd rather be more realistic on what I can deliver, but this time I missed. So back to Matthew McConaughey, I was just like that meme. I wasn't wishing for failure, but I was like, man, did I miss this that much? Was I that far off? So I looked just like him in that meme. Well, I don't smoke and I don't have that much hair, and the hair I have is kind of graying, but other than that, just like Matthew McConaughey. But I was checking the MLS all the time. That house has been on there for a few weeks, so I don't feel good that the people are having a hard time selling it, but I feel better in the fact that I was correct, and if I swing and miss and they go with something that's just not realistic, I understand that. So that was the listing that I missed recently. Even when listings are kind of golden, I would like to get it, but live and learn, I guess. The other dirty little secret with that is, the 5,000 agents, the vast majority of them, almost 80%, started real estate since 2020. So they only know this market. They only know a market that's going up really fast. They know it's appreciating a lot. They don't know how to adjust in a market that's slowing a little bit. They've never had to negotiate repairs or closing cost credits or anything like that. So that's the other kind of secret on there, but it just goes to, do your research, be comfortable with who you're working with. But now on to the real estate market update. And the first thing I want to start off with is some national headlines that were just made. The federal chair, Jerome Powell, says that the Fed is ready to bring some pain to businesses and homeowners across the country in an effort to further fight inflation. They've been talking about this. It's been, about a week or 2 weeks now that they've been hinting at this. The Fed is going to raise rates again. So this is kind of already baked into, what's going on in the stock market and things like that. It's kind of, it's anticipated. It's not going to be a big surprise when it does happen, but it is set to happen again. The thing that might cause a little bit of surprise is how much are they going to do it? Are they going to raise it 3/4 of a point again? Or are they going to do it less? That's just kind of dependent on what inflation's doing and ultimately what they decide, but that's kind of baked in. It's also not directly tied to mortgage interest rates is the other thing to keep in mind there, but it is, obviously tied to the overall economy. And if the Fed wants to bring some pain, as they say it, to help curb inflation, that just means the overall cost for things or for money is going to rise, at least in the short term, which is going to make it uncomfortable. That's kind of designed to crush a little bit of the demand to get inflation under control. Now, locally, a couple stories of what's happened recently in Winston-Salem. We're in a nice neighborhood, a $600,000 price point, so about double the average price point here in Winston-Salem. We had a nice house there, good neighborhood, looked really nice. Multiple offers, one day on the market. I mean, it went well over asking price. And then also in Winston-Salem, just under $500,000 price point. So still at a little bit higher price point than normal. Nice neighborhood, but not like a super high-end neighborhood. The house has a really nice lot. It was in a convenient location, but not really a high-end neighborhood. It was pretty stacked with showings the first and second day. Fortunately, we were able to move quick. We got in there, did a showing, got the house under contract for asking price. So again, it's local and then it's hyper local within those different markets. But the thing to take away from this is the market's still competitive. You know, if we're waiting for something that, you know, there's prices are going to drop or there's a crash coming, we're not seeing that in those examples. But let's take a look real quick at some specific supply and demand numbers. So first thing I want to show you is we'll put up this graph here. This is the 7-day market watch. I keep an eye on this all the time. Back in the winter and spring and early part of the summer, we saw homes that were going under contract. The ones that are going in due diligence were right at and just above new listings. Well, now you've seen again, we've had 2 or 3 months in a row now where that's flipped, where the number of new listings is outpacing the number of homes going under contract. But if you take a look at those numbers, it's not drastic. I mean, we're not seeing like double the new listings to, you know, the homes that are going under contract. There's still a lot of houses going on contract. We're still almost getting all the new listings under contract every week. It's just, we are building a little bit of inventory, just not a tremendous amount right now. And this was taken that covered this very last week of August and then the first day of September. So in the last 7 days in, you know, Winston-Salem, Greensboro, High Point, the entire Triad market, we closed over 600 homes. And there's usually a rush at the end of the month for closings to get in before the new month. So that's not abnormal, but you know, 6 times 4, 2,400. We didn't sell 2,400 homes last month, but we're on pace of not going, you know, too high or too crazy low of where we've been. It just shows that things are kind of doing what they're doing. So we're seeing a slight buildup of inventory on there. Next thing we'll look at on the supply side is the number of new listings. So we'll put up this graph here that shows new listings, and I have August of each year circled. This is a 10-year graph, but I have back to 2018 circled. What I want you to see on here is that new listings tend to peak for the year around August. After August, we tend to get fewer listings for each month for the rest of the year through winter and then up until spring starts and they build back up again. That's kind of the cycle here that we see. So we're kind of at the top end of new listings. The thing to notice about this is we made a new low in August new listings. So we had fewer new listings in August than normal. So if we had fewer listings, and that tends to be the peak of our new listing market, we see that is pointing to still maintaining a shortness of inventory, which is going to put strains on the supply. Last one we'll show on the supply side is the total number of homes for sale. We're seeing those start to creep up a little bit, right? They're starting to move up. It just kind of followed the trend what they did last month. If you look at the 10-year graph though, again, we're still really near all-time lows, and we're definitely not even close to where we were in 2019, you know, before the pandemic levels of inventory. So again, this points to still being in short supply. And I think with the number of new listings in August being lower, we're going to be facing that probably through fall and into the winter. We'll still kind of be short of supply. Then on the other side of that, of the supply and demand piece, is the demand piece. And demand really stayed flat in all these areas that I'm going to talk about. Even with rates going up, even with record high inflation, even with everything that we're seeing going on, we've seen demand really stay constant through these following numbers. Our average price per square foot has stayed flat again. Our average days on market has been 7 days or fewer for now 2 years. So it's been 2 years where our average days on market in our MLS is 7 days or fewer. Right now we're at 6 days, but again, 2 years. So that just shows to how much demand is still in the market. And then the last one is percent of list price. So we're still seeing our average list price MLS wide is still over 100%. Now it's come down a touch. It's at 100.6%. So it's not, you know, the 101, 102% MLS wide that it was. So, but it still tends to be over asking. And according to Redfin, about 65% of the homes are selling for over asking price, and they're selling on an average of about 3% over asking price, with homes, as they call them, going for about 8% or 108% of asking price, which kind of matches what I've been seeing, right? A nice home in a good area that's, you know, priced correctly, it's going to get a lot of action. It's still going to be competitive. It's not crazy like it was, but it's not discounts and things like that. So overall in the Triad market, we're seeing still similar story, right? Lower levels of supply, steady demand still, strong demand, which, you know, that's going to still point to prices going up. What does all that mean for you if you're thinking about buying or selling? It means while the market's changed, it's definitely not like it was, right? Sellers aren't going to see, you know, 10% appreciation every year, or 15% appreciation every year like they did a few years ago. On the other other hand, it's still a competitive market. There's still few listings. There's still more buyers for each listing generally. So it's still a good time to sell. On the other hand, and I think, everything that we're pointing to as the market's normalizing, while sellers aren't going to see that, 10 to 15% appreciation, I do think that Winston-Salem is going to beat the national average of about 3 to 4% per year. So it seems like homes in Winston-Salem are going to appreciate by, 4% or more over this next year with everything that I'm seeing right now. So all in all, good news for sellers. And on the buyer side, it's still kind of a tough time for buyers, right? They're going to say, man, am I overpaying? Am I going too fast? Am I doing all these things? Simply because it's not the frantic pace that it was. So it feels like it's slower, and they're going to say, man, did I overpay? You were only up against 2 or 3 offers instead of literally 8 or 10, right? It's still going to have that kind of weird feeling in the market of still like, are you sure we have to offer this? Are you sure we have to do this? So I understand buyers, being still kind of concerned with what's going on right now. I understand it. It just kind of is what I see happening. You can get houses, you can get them under contract, you got to make good offers, and you still have to be a little bit aggressive. It's not crazy like it was, but it's definitely not coming down. Prices haven't dropped. I am having to correct people, especially if they're calling from other markets, up in the Pacific Northwest or California, Miami. I've talked to people where they're saying that prices are actually coming down. I got to be clear, we're not seeing that here. I don't anticipate prices in anywhere in the Triad dropping anytime soon. I think that they're going to continue to go up, just at a more slow pace. With sellers wishing they would have sold, a couple last year or a few months ago, and buyers still wondering kind of if they've paid too much because the market wasn't as crazy, but they still had to make a asking or slightly over asking offer. That's pointing to me we're getting closer to balance. When neither side's like super pumped about it, that just kind of shows we're getting a little bit closer to balance. And that's what I'm glad to finally begin to see here. If you need help with real estate, I'd love to be a resource for you. You can email me directly at jeff@govalentino.com. I'd love to help. Thanks.